Welcome to this week's MoneyFit Live webinar on upside down car loans. Trying to figure out what your options might be. My name is Todd Christensen. I'm Education Manager at MoneyFit, author of Everyday Money for Everyday People. I'm glad you're joining me today. This is a topic that is really frustrating for not just the people who have upside down car loans, but those who are trying to help consumers get out of debt. There really, unfortunately, are not any programs out there, unfortunately or fortunately, that will help consumers with upside down car loans. You pay it, you don't, there's not a whole lot of options. Mortgages, there's government programs, there's nonprofits to help you stay in your home or get into a home. There are just not a whole lot of options for figuring out how to get out of your car loan. At least not a lot of programs. Want to go over the options today. There are some. You do have different options to choose from. Let's go over the basics. First of all, how do you know if you're in upside down? Chances are, if your car is if you have a car loan and your car is 1 or 2, 3 years old, you're probably upside down in it. Cars devalue much quicker than you can pay down the loan, or you typically pay down the loan in the first couple of years. Cars just go down in value. That's what they do. You want to find out, go to one of two places. You go to Kelley Blue Book, it's kbb.com, or you can go to the NADA Guides, NADA Guides.com. That is the National Automobile Dealership Association. Either one of those will give you a good idea of how much your vehicle is worth based on its age, how many miles it has on it, what comes with it, so forth. So check it out and then compare it to your current balance. If your current balance is more than the value of the car, you are upside down in your loan. Is that a bad thing? Not necessarily. If anything happens, though, where you have to get out of the car, you have to sell it, you can't pay for it, you can't afford it, maybe you're unemployed, that does cause problems. And that's what we often see here. When somebody comes to see us, they were in a crisis situation and they need to get rid of the car fast or figure out how to keep it. Here are some of the most common reactions. People immediately try and sell it. If they owe money on the car, the bank will not let you sell it unless you can sell it for what it's worth. And if it's underwater, you can't sell it for what it's worth. Who's going to buy a car that's worth less than what you have to pay off? It's not going to happen. So that's where people start first. And then they might go to a family member. Hey, can you help me make payments for a while? And that sometimes we'll meet people who have been doing that for 2, 3, 4 months. It's kind of treating the symptom and not the cause. The problem is that the car is, the monthly payment is more than what you can afford. So getting somebody else to pay for it temporarily, even long term, that's not solving your solution, the problem that you're dealing with. Then people say, well, I'll transfer loan. And you will see this online on a lot of local websites. They'll say, just take over the payments. I can't afford it anymore. Just take over the payments. You can't take over payments. Banks will not just say, okay, well, you start paying me and you stop paying me. It has to be a new loan. If this person over here can qualify for a loan, great. But otherwise, if they don't have good credit, they're not going to be able to get a loan. But it's a new loan. And since you're going to have to pay it, that they'd have to pay off more than what the car is worth. There's really no chance to find somebody to just take over a loan. And then people start ignoring it because they feel, if I can't sell it, there's really nothing else for me to do. And then they start to hide from the phone calls from the lender. And we all know where that ends up. If you do nothing about it, there will be somebody showing up sometime while you're not at home typically, and you'll wake up in the morning or you'll come home from work and you will find that your vehicle is gone. It doesn't matter if you've been paying on it for 2 years or for 2 months. If you don't make the payments, most states allow the lender to have the vehicle repossessed pretty much immediately, the day after its payment is missed. Most lenders don't, because they're not in the business of repossessing. Their job, they're not specialists at selling vehicles. They are specialists at lending, and so they don't want to have to repossess a car. So generally, you don't lose the vehicle the day after it's a missed payment, but you don't want to mess around with late payments on vehicles. Okay, so let's talk about 8 steps that will help you keep your car. And none of these are guaranteed, and some of them may not even be good ideas. But these are 8 steps just to be aware of. First of all, cut expenses. Cut. It's painful. But if you want to keep the car, you have to figure out one way to come up with some extra money is to cut other expenses. Now, a lot of times that's just not a possibility. Along with this, there should be, I could add increase income. We'll get to that. But cut expenses so that you can afford your monthly payment. If your car is that important to you. If it's not, maybe getting rid of it is not such a bad deal for your finances. Juggle payments. This is another one that, this is one of those, it may not be a great idea. But if your payment is due, typically your car payment is due at the 5th of the month, and you've been making payments for a year or two, you might be able to contact your lender and ask them to move that payment back in the month, maybe the 20th, or so it comes after your another payday. That might give you some breathing room to start making those payments again. They're not going to move it from one month to the next, though, just to be aware of that. And you might have to do that with a number of different payments. Maybe you can't change your car payment, but you have been making payments on a credit card, and you can ask them to move it back in the month. Juggling payments. Consolidate payments. Now, consolidating payments you would do through a nonprofit credit counseling agency. Disclosure or disclaimer, I'm employed by a nonprofit credit counseling agency, MoneyFit by DRS. But this would be a step that if you're looking for third-party help, that you just can't, your payments are too big, particularly if you have credit card collection accounts, debts that have high interest rates in the teens or 20s or higher. This might be a good option for you. Contact us or another credit counseling agency and see what your options are. There's no fee to explore your options. Your payment might be lowered pretty significantly enough on your other debts, credit cards and so forth, that you can now afford your car loan. Credit counseling agencies cannot consolidate your car loan. That's one of the challenges that we have. People ask us if we help them with all these debts, but we can't help them with the car loan, and sometimes that's the biggest problem they have. Neither can we help consolidate mortgage loans, although many credit counseling agencies do offer housing counseling. Step 4, option. Start using or use your savings strategically. Don't just dip into your savings to make a payment this month. Make sure that, hey, if I make the payment this month, am I going to be in the same situation next month? Because if you are, you're using savings just to give yourself an extra month, but you're still going to lose the car. Make sure you're making your decisions based on long-term, not just today's crisis. Refinancing. This may be an option. You can contact your current lender. You can contact other banks, credit unions, and ask them, hey, this is the situation. My vehicle is this old. I owe this much on it. This is what the current value is. They'll do their own lookup on what the value is, but you might be able to refinance at a lower monthly payment. What's the downside? It usually will extend it out by another year or 2 or 3, so that over time you're paying more. If you're going to do that, rarely a great idea, but if you're going to do that, do everything you can to make extra payments all the time to get paid off still as soon as possible. Because essentially you'll be underwater again within a matter of days. Look, here's that idea about increasing income. Along with cutting expenses, look at increasing income. Take on some side hustles. Is there something you can do in the evenings after work, or if you work at night, can you do something in the morning or during the day that you can earn some extra money? You know, courier services, ride sharing, delivery, whatever it might be. That some of these you can get signed up and start making money within a matter of a week or two before you get a paycheck. It may not be a whole lot, but it might be just enough to make that payment. But again, make sure that you're not doing this on a long term. You don't want to get into this exhausting lifestyle of having a second job just to pay for a car that you really can't afford. Have a sale. Step 7. Are there things sitting around your garage or in your backyard that you can come up with an extra couple $100? Have a garage sale. Again, though, is this just a temporary fix? But it could help you keep it if this is the month that you're struggling to make the payment. You just need to come up with a few extra $100. That might be the deal. Okay, step 6. Let me go back. We're at step 8. Again, this is where I would say this is not necessarily a good idea. Take on more debt. There are people that will say, well, I'll get a car loan, I'll get a personal loan, or I will take out, heaven forbid, cash out of a credit card at 25-30% interest, or even worse, a payday loan just to make ends meet that 1 month, and then the next month they lose the car and they have a payday loan. More debt is not likely going to be the answer, but some people are going to head that direction anyway. Generally, do not recommend it. I go back to the refinancing. If you're going to be able to lower the interest rate, it might be a good idea if you can pay it off and pay less over time. Okay, so how about if you're not necessarily married to your car, you're like, okay, yes, I've enjoyed this car, but I don't need to keep this car, but I do need some form of transportation. Here's some 4 steps. None of them are guaranteed, again, to work. Roll your debt into a new car loan. I'm not a fan of new cars because they depreciate much faster than old cars. Much faster. You drive it off the lot, and now it's worth 20% less than what you owe. There are dealerships that will offer you, and they'll actually advertise it. If you're underwater on your car loan, or if you are upside down on your car loan, come on in, we'll get you in a new car. And they will take the difference between what you owe and the value of the vehicle, and they will roll that into a new loan, which means you are still upside down on the vehicle. So there's no guarantee this is going to work for you. If it's somehow a smaller payment than what you're dealing with now, it might be something to consider, but be very wary of these opportunities. Some dealerships offer, if you're going to buy a new car, at certain times of the year, they offer cashback rebates. And instead of throwing your vehicle into a new vehicle loan, taking on your old vehicle loan upside down portion of it, you can get into a new vehicle and use that cash back to pay off your other vehicle. Now, there are several problems with that. You can imagine you'd have to qualify for the second loan in order to be able to get the loan, the cash back, and pay off the other loan. And you're also getting into, again, a brand new car. Be careful if it's probably going to be more than what you were paying on the old car. So there's a number of problems with that. Again, not a guarantee that's going to work. Step 3, trade down. Now that looks like a nice car for some people. Just take a look a little closer, see what it's made out of. But you don't have to downsize to a toy car, but look at downsizing. If you're going to trade in for another vehicle, if you're going to be able to afford the new payments, you are going to have to downsize, get a smaller vehicle, older vehicle, so that your monthly payments are more affordable to you. Step 4, a lot of people look at leasing and think, yeah, I'll lease, then that way I can get a lower monthly payment. And sometimes you can roll your upside down loan into a lease. You're going to have to come up with some cash, which means it's going to be tough. Plus, now you no longer have, now vehicles depreciate, but at the end of 3 or 5 or 10, 15 years when the vehicle is about ready to die, you've been able to stretch your payments after you've paid off after 3-5 years, then you don't have any kind of payments at all for 10 years. Leasing, you are in it for the forever. Never a fan of leasing if it's a personal vehicle. It doesn't make sense financially. The people will say, "Oh yeah, but that's the way I can afford a nice car." You're not affording a nice car. You're obligating yourself to larger payments over the long run. So be very careful about this option. Not necessarily a good one at all. Okay, 4 steps. Here we go. 4 steps to preventing upside down car loans. Again, no guarantees. This is terrible. I have no guarantees at all. That's the problem with car loans, is you never have a guarantee. If you have a car loan, you owe the money or you lose the vehicle. That's the reality. So there is no guarantee on how to fix car loans. Here you go. 1, have patience. Preventing a vehicle from being upside down. If you got a car loan, pay it down. Just take your time. Don't go from one car to the next to the next. I've met people who have taken advantage of those rolling over options, and they've gone from one vehicle to another within a matter of a year or 2, and they keep getting more expensive vehicles and huge loans. Pretty soon they have this massive loan that they can't afford. Just be patient. Cars, brand new cars, which should last between 150 and 200,000 miles anymore. That, for most people, that's 10 to 15, 20 years almost, depending on how much you drive it a year. Be patient and pay off your car, and then start saving for your next vehicle. Make extra payments. Of course, this one makes sense, especially early on in the loan where the vehicle is depreciating so quickly. Make as many extra payments, as large payments as you can afford, while at the same time still saving. I got to throw that in. Never stop saving, but make extra payments to pay down your loan. Step 3, take out shorter loans to prevent being underwater. What this does is it forces you to have larger monthly payments, but your loan will be going down faster because you have to be out of debt in a shorter period of time. So your vehicle, it still will be underwater for probably 5, 6, 12 months, but not as long and not as much. So this also forces you to keep your car loan just to a point where you can afford it and doesn't get overextended into many years down the road. Step 4, look for, of course, a more affordable vehicle. As we're talking about downsizing, go with a vehicle you can afford, even if it's not the one you love, even if it's not as nice as your neighbors or your friends, or it's not as nice as the one you have been driving. But look at a more affordable vehicle. Okay, I got a guarantee for you. Here you go. The only way that you can prevent an upside down car loan, I bet you can guess by now. Don't take out a car loan. That is the only way you can prevent being in an upside down car loan. Just don't do it. If they're at all possible, avoid car loans. I know Americans think that it is the way life is, that you have to have a car loan. You don't. The average American has a car loan payment that is well over $550 now every month. That's a tenth of every dollar of gross income that a typical household has. 1 out of every 10 of what that means is about almost an hour a day you're working just to have the vehicle, just to get to work and from work. You don't make money until you've been there for an hour, so that you don't make money for food or for housing or clothing, anything like that, because we have these massive car payments, because we just are in love with our vehicles and think that somehow having a nicer vehicle makes us more valuable as a person, or it's going to make us happier, and it doesn't. Take out a loan you can afford. You'll be happier with it and more satisfied when you know that you're not underwater. Okay, if there's something you learned here today, please do consider liking this video. And also, please subscribe to our channel so you can be advised and notified whenever we have a new one coming out. Every Thursday, we do have this Money Fit Live midday. And we, along with that, have a live chat. These videos will be archived, and you can go to moneyfit.org/live, and there'll be a button there where you can find an archive to the past videos. Now, if you'd like a subscription, or excuse me, a certificate of completion for this webinar, please go to this website here on the screen and enter that password. The password is upside20. No capital letters, no spaces, no dashes, no dots. Upside, UPSIDE 20. That is your password, and you'll need that, entering your name, how you want to be on the certificate, and then your email address where you'd like the certificate to be sent to, and put in the passcode, and you'll get that certificate almost immediately. Thank you, and have yourself a great day.